Hello, Space Watchers. This is Emma, your editor-in-chief. And before we even start, allow me to thank all our business club members for their support. This is what allows us actually to keep our independent journalists going. So thank you very much. We really do appreciate your help. And if you want to know how to join our business club, please just see the banner below or click in the link we are putting in the chat. So just don't be shy, click away, please. So also remember to sign up for our newsletters. We have several of them. We actually have 3 of them, our daily, our weekly, our communication one. They're completely free. And it is the best way to be kept updated with the space business, with the space sector. Our team will post the links for the sign up in the chat. So just click on the link to sign up for free and be involved. And of course, don't forget all our media production. Today we're doing video, but we produce also podcasts. So don't forget to listen to our collection of podcasts. We have literally hundreds of them, and you have plenty of choice. We have our Space Café podcast channel, for example, or we also have our Space Café radio channel, where we do slightly different type of podcasts. And of course, we also have a coming soon new podcast, which is our Space for Good podcast channel, focused on space for climate, environment, and the global community. So you can, I'm not sure you can start to follow it because we haven't populated the first episode yet, but please do keep it in your on your radar. And if you want, of course, to become a Space Watchers, please visit our fan shop on our website. So don't forget, we also have that one. Is one of the best ways to support us and feel involved. And now that we are done with the ads, I think we can finally start. And here we are. Hello, everyone. We are here with our Space Café 33 minutes live. Today we also have Torsten, so double pleasure. My co-host is live from Dresden, who's in Germany, in case you don't know it, at the Morpheus Space Grand Opening event. Torsten, before we start with our guest, what's going on there and why is it important that you're there? Not for the climate.
It's warm, yeah, absolutely. But it's nice. So we have seen here today, as you mentioned already, the grand opening of Morpheus Space, a startup here in Dresden. And Dresden, for everyone that doesn't know it, is not known for its space industry, obviously. So it's a unicorn here, and they invested, and that's what brings it here, the connection into the Space Café today. They just invested 1.5 million in a clean room facility for mass production of their modular propulsion system. To note, this opening today, this morning, was together with the head of state of Saxonia, Michael Kretschmer, who pointed out that this is the biggest space production facility in the state of Saxonia. So, and that makes it so unique. They're a youth-based company here in Dresden. They originated here from the University of Dresden, and they also US investor-backed, not just US, but there's a huge portion of US investment but also German investors. So that's very interesting to see. And they are in orbit right now. So they have 12 of their propulsion systems in orbit. So I think that's a great example of how a successful startup can make its way. And I would say a good lead way into our conversation, into our Space Café today. And now I will be quiet. Emma, back to you and Connor.
Thank you, Torsten. We're looking forward to see them on our pages because, as everybody knows, you're nobody in the space sector if Connor Sattely, our guest of today, doesn't speak about you in our column. Hello, Connor. Welcome. Allow me to introduce our guest. He's the VC analyst for SpaceWatch.Global, but he's also this associate at the Decile Group and a startup investment consultant. He's here today as the writer of our monthly column, VentureSpace, who's having a great success. And welcome, Connor. How are you doing today?
Thanks, Emma. Thanks for having me. I'm really excited to be here. I'm doing fine. It's really an honor to join you on the 33 minutes.
It's our pleasure. This is our first live event, all focused on a venture capital column that we actually produce. So this is also a first for us. So shall we start maybe zooming out a bit? So let's not delve into the last few months. I think we need a bit of contextualization, Connor. Let's start from last year, before focusing on the past 6 months. Which differences did you observe? Anything important to point out? What do you think about the past 12 months in the sector?
Yeah, sure. Well, I think the best place to start is by looking at what's gotten investment in space tech over the last decade, actually. Generally, if you wanted to start investing in space tech in the last 10 years up till about 2023, you were about 90% of your investment was going to go into satellites. That is to say, GPS, GeoInt, including Earth observation, and satellite communications. That's 90% of venture capital is essentially going into those industries until 2023. So if you ever take a period of time within the space tech landscape and you look at what's getting investment, you're expecting 90% to go into that. That is not the case in 2024. We're getting really interesting new industries that are coming up in space tech. And I think maybe we're underestimating as an industry exactly how much investment is going into sort of emerging markets and emerging economies as related to space tech. A couple examples are usually launch gets about 7 or 8% of VC investment. So far this year, it's gotten 20% of global investment. So a lot of new launch companies are starting, trying to figure out cheaper, more efficient, and greener ways of launching CubeSats and small sats. And also emerging industries, what used to be considered kind of edge case, I'm not sure if there's a market for this, is now getting, usually it gets 1%, now it's getting 17%. So this is industries like logistics, how satellites are moving around, avoiding debris, extending their asset life cycles, but also some still edge case industries like lunar stations and industrial development.
Are we growing an appetite for risk, or is getting less risky? Because there is one thing I know about investments is that you guys don't like risks.
Yeah, well, that's an interesting perspective. I mean, if you really think about what venture capital is, from a conceptual perspective, it's venture, right? It literally comes from adventure. It is designed to be the risky funding of new ventures that, let's say, a bank or perhaps a sovereign wealth fund isn't willing to do. There's a rule called the power law that is sort of an economic observation that if you, as a VC, invest in 35 companies and 2 of them go decacorn or unicorn, those 2 can return your fund. They can make your fund profitable for your investors. So I think actually VCs are willing to take a risk because we stand at the precipice of where the space industry could triple or quadruple in coming years. If you happen to pick the winner in, let's say, satellite logistics now, even if you miss 30 other investments, that one could make your fund quite profitable. So I think VCs are open for the risk. I think based on what I've seen this year, they're embracing some of those risks, especially around launch and logistics.
So let's zoom in a bit on the last 6 months. You just wrote our recap. In fact, if somebody can put the link to his recent article, that will be great, so our audience maybe can find it. But I would like to focus with you a bit on the numbers. So we had a chart. If somebody can put in the chart, thank you very much. So I was quite interested in those numbers. So these are like the top 5 aggregated, and we see that the UK is just 4th after the EU. But then you also saw another graph which was showing how, when they just get split, nations that I would have not thought about, for example, Italy, they actually invest more than the UK. I was kind of surprised about this, but in general, could you walk us through these numbers and explain us what's the meaning of it? What's the granularity, maybe?
Sure. Well, if you glance at this one, the conclusion is pretty simple, is that there's 3 powerhouses of regions in which startups are raising venture capital. That would be China, US, and EU. Now, whether you include the UK within, let's say, let's call it Europe, and maybe include UK and Switzerland, that you could do that. But if you break them out, this is what it looks like. I think the other chart is also quite interesting, if we could move to the other one, which is if you break out the EU into obviously very different investment domiciles, the chart starts looking a lot different, which is that there are 2 let's say, national level powerhouses in China and US, and then a lot of really interesting space tech ecosystems around Europe. Now, you pointed out Italy has raised more VC than the UK, or let's say Italian startups have raised more VC than UK startups. That's true, but to quote our good friend Mark Twain, there's lies, damn lies, and statistics, right? So if we take a look at Italy, for example, D-Orbit raised about 109 million, and Italy's total is about 115 or so. So most of that can be taken up by just one investment. Whereas the UK had 15 startups raised this year, and they had no sort of major round. The largest was about 34 million. So the UK, I would expect the UK to pass Italy soon. The more active ecosystems with more investments, we'll see them higher at the end of the year. Another great example is Finland is over India in this, and it's just because ICI raised another huge round to the surprise of nobody. That doesn't mean Finland has a more vibrant or active ecosystem than India. I would say the opposite, because India has quite a lot of investments. We'd expect them to pull ahead by the end of the year.
Very interesting. As usual, the graphs, they lie to us. And this is very interesting what you just pointed out, the fact that in Italy, there is basically one huge investment, which is the orbit. And then in the UK, instead, there are multiple smaller realities which they've been to raise. So you expect that in the long term, already maybe next year, we're going to have a different situation. Very, very interesting. Okay, thank you very much for explaining the chart. So let's stick for a second to this geographical distribution analysis. What I cannot understand is whether EU space tech are getting EU funding, or whether it's just the Americans trying to snatch up the EU innovation. Like in those graphics, you show me the money that the certain startups are receiving based on the countries, but I'm not understanding where the money are coming from. Do you have any perspective on that?
Yeah, well, I'm glad you raised it because it's a perception that I hear a lot. I'm based in Amsterdam, which our geography nerds might be able to tell is this map behind me. But and as I'm talking to space tech entrepreneurs in Europe, there's this perception that we don't want to raise VC because the only VC out there is American VC, and we don't, we want to go through the European Space Agency Business Incubation Center. We want to focus on where we are and the future of European space efforts. So VC is not so interesting for us. It's an American thing. I'm seeing the opposite. If we take, for example, the 5 biggest investments this year in EU space tech, that would be ISAR from Germany, PLD Space from Spain, Unseen Labs from France, ICI from Finland, and D-Orbit from Italy. They all raised between 70 and 110 million, right? So these are sizable kind of Series B-ish or growth fund-ish rounds. We don't know, we don't have the data for PLD Space from Spain, but ISAR is super EU leaning. So it's NATO Innovation Fund. You can make an argument that's a little US, it's a little EU. It kind of straddles both continents. Same thing with Besant, one of their VC investors. But then they have Airbus, G3T, Bayern, UVC Partners, Lakestar. These are all EU-based investors. So ISAR's round is mostly European. Same thing with Unseen Labs, and not just European, it's almost all French investors investing in Unseen Labs. So that's Supernova, iSalt, Unexo, 360 Capital, BPI France, for example, all French, all investing in that French tech. ICI was mostly the Finnish sovereign fund, so that's definitely EU. And D-Orbit, a kind of an interesting one because one of their lead investors was actually Japanese.
Yeah,
right. And the rest of their investors are Italian. So if anything, you could make the argument that the Japanese are coming in stature. No, you cannot make that argument. But this perception that most of the capital going into EU space tech is somehow like American, or like, yeah, it's the Americans coming to steal the IP. It doesn't seem to be true this year. We're seeing a lot of investment by EU-based VC in EU-based space tech, which I think is really cool.
This is very interesting, actually. I think it's important to clarify something like this, absolutely. And since we're speaking of this, let's speak a bit about the trends that you observe when it comes to VC. Which VCs are more active? In which industry? Why? Can you help us to understand which trends are flowing within the investors?
Yeah, absolutely. Well, I mentioned it at the beginning that a few areas that I think are interesting is logistics. Logistics is about management of space-based assets, right? How do we help satellites avoid space debris, extend their life cycles, provide service to them, etc. So there's a few examples of this, but one of my favorite examples was our deal of the month in February called Kurs Orbital. Kurs Orbital is about in-space satellite servicing. I had a chance to chat with Wojtek, who works with OTB. He was the lead investor into Kurz's round, and he likened it to, imagine that your car breaks down. It's got a flat tire, or you didn't put enough coolant in, or something breaks down on the side of the road, and you do one of two things: you just leave it there on the side of the road, or you throw it into a big fire. Right. That's what we do with satellites that are broken down, is like either we destroy them or we just kind of leave them there and get a new satellite. Right. So Kurs Orbital is saying, hang on a second, if we can do in-orbit docking in a way that can extend life cycles to fix issues on board or refuel or change the mission parameters, we can create a lot less debris. So that's an example of a logistics startup. Now, 2 years ago, this was seen as less than 1% of space tech investment. This year so far, it's about 16, 17%. So we're seeing a drastic increase in funding for logistics companies. I think this is reflective of the space debris problem that is getting worse. It's harder to keep your assets safe in space when there's so much space debris. It's also reflective about where the future of the industry is going, that it's not only about who can launch stuff up there, but who can provide the right software, hardware, management systems to keep assets safe once they're there. One other interesting trend I see is about industrials. So industrials is about producing stuff in orbit, right? So if you can manufacture optical cables in orbit, for example, the hypothesis is the presence of microgravity, the changed conditions of producing optical cables in orbit can provide better optical cables. It can also change the manufacturing process of pharmaceuticals or even implants. So a couple examples of what we're seeing getting funded there is Lambda Vision. They make artificial retina implants, and their approach is to create these implants in orbit. That'll create a new type of implant with a higher success rate, that'll hopefully lead to better medical procedures. Space Forge is looking at materials and industrials like optical cables. Even Lumen Orbit is looking into sort of, now you can call this industrials or you can call it stations, but what they plan to produce in space is data analysis. Instead of bringing all of your data down to the Earth and analyzing it, why not send it to a satellite that's there anyways? It can do the data processing that you need to do and beam only the conclusions of that data processing down to Earth. Then you're talking about cutting data costs by 99%. So these industrials, they're still only 1 or 2%, but it's still a drastic increase from all space tech funding that's happened until 2022 or 23. So those are the really interesting industries that I think could be growing. But all that being said, the overwhelming majority is still in satellites. It's still in GPS, GeoInt, and SATCOM. There's a lot of interesting applications of SATCOM still, to be able to access internet while you're on planes or on ships, or be able to track things around the planet, including illegal shipping, to be able to analyze satellite data to use it for climate resiliency or agriculture or even insurance, or to combat wildlife crime or deforestation or erosion. These are all still sort of within the traditional, what is normally 90% of space tech investment. So that's still a very strong, I think, investment landscape.
So just because you mentioned this, like looking at 2025, do you think that 2025 is going to be the year of the industrials, like logistic was the year for 2024? 2024 was the year of logistic. Is it going to be this change? It's going to be quite visible and dramatic, or you think we're still going to have a kind of business as usual for a while?
Well, I'd say more business as usual than a dramatic increase towards industrials. The one monkey wrench that gets thrown in there, of course, is Starship. If we see space tech companies, especially early stage space tech companies, able to launch prototypes of industrial manufacturing at a much cheaper rate than they currently can because of the capacity that Starship can bring, That might change things. That you might see kind of an explosion of new industrials ideas coming up. Because right now, as I'm sure everybody watching knows, anything you want to launch, you need to obsess over every single millimeter of dimension and every single kg of weight, right? Because that determines the cost and of launch. You can only launch it on certain launch vehicles, of course. But Starship might change that pretty significantly. If it does, we might see an explosion of industrials. We might also see some early bets on industrials. People who are picking winners about industrial manufacturing, especially I think optical cables and pharma are two places where VCs might start taking more early bets. But I don't think it'll match the logistics industry quite yet.
Who would you bet on?
Who would I bet on? Yeah, well, I'm in the fortunate position of not being an actively deploying VC, so you'd have to ask my VC friends about that. One that I find really interesting is Varda Pharmaceuticals. They were our deal of the month, I think, in April.
Couple of months, 2-3 months.
Yeah. They're based in the States with a Bulgarian founder. I really like what they're doing for pharmaceutical production. I think is quite interesting. And I like to dream like anybody else about these emerging industries. Obviously, they're unproven. It's unclear what the market is totally, but I like to dream too and think that pharmaceutical production could be interesting because perhaps we find new methodologies that allow us to cure diseases that we haven't been able to cure so far, or to create a better quality of life for people who are struggling from chronic pain or chronic disease. That's really exciting for me. So I give Varda a thumbs up and a tip of the hat, and I wish them the best.
And I think you frame it correctly. I think it's a bit unfair if we just sell the dream, because it can be quite dangerous. As you said, certain things are still unproven, and we don't know if actually it's worth it to produce medicine in zero-G instead of doing it on Earth when it comes to revenue and actual production line. But I think I get it. I get what you say. It's the balance between the dream and reality, and we want to push the dream, keeping an eye on reality and be as intellectually honest as possible. Fantastic. So we looked at 2025. Can you give me a few minutes snapshot of what you think is going to happen in the next 6 months? How are we going to close the year?
Well, what I mentioned earlier was the ecosystems like India and the UK that have a lot of volume, but not necessarily a lot of sort of huge deals. I think that we're going to see those popping up. I think those will get into a comfortable 4th, 5th, 6th place in terms of how many startups are raising and at what value. I think we'll continue to see more investment in logistics. I don't think VCs are done picking winners yet on space debris avoidance or asset lifetime extension. So I think we'll see more logistics, but I would still say at a rate of between 60 and 80%, most of what we're going to see is still investment in traditional satellite industries. So that's SATCOM, GPS, GEOINT. I think we'll see a lot more of that still. One interesting thing is to note that a lot of space tech companies raised rounds in 2021, 2022. And then VC kind of dropped off a cliff in 2023. The venture industry as a whole has been going through a rough time in 2023. So I believe that there will be quite a lot of startups that have raised rounds in late 2022 that right about now are going to be running out of runway. So we might see some down rounds come in with some space tech that is interested in raising funding to keep alive, that is willing to raise at a lower valuation than before. And we might see some high profile startups closing down that raised big rounds in 2022. So I don't think we're out of that gully yet. But what I can say is I think that the VC ecosystem in space tech is strong. It won't be as strong as in 2022 when we were sort of at a height of venture investing. But I think we're going to have a really strong year, between $7 and $8 billion in pure venture equity investment into really pure kind of space tech focused stuff. So yeah, I think it's going to be a fascinating next 6 months. And as always, month by month, you can follow it on SpaceWatch. What we try and do is just comment every single month on what's getting investment, so that at any time you can go back and see every single space tech startup globally that's getting equity VC investment. So follow along, and I guess you'll all find out.
Exactly, we follow it. You follow it month by month, so we see how it grows and how it changes, and then maybe in December we will have something else to wrap up the year again. So we have just a few minutes left. I don't want to steal the stage from guests and audience, so if there is some live questions, I can take it up. So don't be shy, please ask some questions. We have some questions. Yeah, we have a comment by Tim, who say, interesting to hear that the startup companies see things different from what is actually happening on the VC investing. And that's quite interesting, actually. What do you think, Connor, about this point of view?
Yeah, well, he hit the nail on the head. Good job, Tim. And it's not just true in space tech, it's true in every industry. Startups see VC completely differently than VCs see VCs, or startups see the market different than VCs see the market. It's a classic startup problem. I think within space tech, any entrepreneur or founder that has a brand new idea to do some new industry or market, they need to understand how that pitch comes across to VCs. If you're pitching, for example, I was working with a startup in the Netherlands that is doing industrials manufacturing, optical cable manufacturing. And that's a really specific type of pitch when you're pitching something that has absolutely no examples of it ever working ever. There are VCs who like that stuff, but as a founder, you need to recognize that you're in that tier of we don't have a proven market versus, for example, satellite imagery analysis. Okay, then you need to realize you're in an industry that has proven examples of that working. So there's a burden on you. You need to go out and find examples of it working, help your VCs understand that. How am I going to be different, or how am I going to capture more of the market than that successful example? Why do I think I could exit like that successful example exited? So I guess a failure of understanding on how developed your market is and how developed the ecosystem is for your customers to purchase what you're building is the key difference between founders and VCs there.
And VCs, absolutely. And here a question from Torsten, who is particularly worried about Germany. So he's asking if there is a shrinking space budget, will it have an impact on the VC investment? Don't know, because they're private, but Connor.
Well, yeah, they're private, but then in the EU, a lot of VCs will get their funding from public sources. So, and this is something you don't see too much in American VCs, for example, is when you want to go start a VC fund, you must think about who are my LPs, my limited partners, right? And for a lot of funds in the EU, one of your LPs is probably going to be a public sector investment fund. But Torsten, yeah, the way I see it, and I'm not so much of an expert on public funding for space, but the way that I see it is I don't think that it'll impact VCs too much because how I understand it is the public infrastructure budgets on space usually go towards a very later stage, usually already IPO'd or publicly offered companies that are sort of a critical part of the space operations of the ESA or of a particular company, right? So the companies that are providing critical government infrastructure, geostationary satellites, for example, are usually the ones that get the investment by the government. But that's more later stage. I see more early stage activity right now, and I don't think that'll be impacted too much. But the wider problem, the longer term problem is if investments drop in space tech regionally, then there's less launch infrastructure, there's less investment in the types of programs that help early stage startups. So there could be pipeline problems. For example, I think the European Space Agency business incubation centers are a fantastic pipeline for early stage VCs in Europe. There doesn't seem to be any indication, at least from my understanding, that budget's being cut or anything, but let's say it was, that would really negatively impact VCs on the pipeline side. So yeah, that would cause some problems. But in general, Torsten, don't worry about Germany, man. Germany's doing okay.
I mean, what we hear here is that if the government invests into projects, then it's a positive sign for VC. So the other way around, if the government shrinks its budget, then it means that the government does not believe in this infrastructure, in this critical element of space to venture it. So, and these are the thoughts on the new space or entrepreneur level that I'm hearing here in Germany. If I'm not worried about Germany, who would be?
That's a fantastic philosophical question to end that conversation on.
Let's take the last question. I want to give the stage to someone that is not part of the team, is Eyal Abramovich. It's kind of a generic question. What kind of collaboration opportunities exist in the space economy? I suppose it means between the non-space sector and the space sector. This is how I'm interpreting this. I'm sorry, Eyal, if I'm not interpreting correctly, but Connor, over to you.
Yeah, well, it's a really good question. Eyal, I'm reaching over to my bookshelf here. I recommend this book, if you haven't read it, The Space Economy. It's by a guy named Chad Anderson. He runs a VC called Space Capital in the States. He talks a lot about these collaborations. What's next? What's interesting for non-space companies to collaborate on? To point a couple out, I think as much as satellite imagery has been used by every single industry, I think we've only scratched the surface of understanding how satellite imagery can be used by non-space tech companies. A great example is there's a few investments this year that went into utilities monitoring. So let's say that your job is to monitor all of the pipelines in the UK for methane leaks, for example. How are you going to find a methane leak? Well, if your methane levels going through your pipeline suddenly become lower, you have a major leak. You can close off sections until you find where that major leak is. But what if your levels are only 0.2% lower? What if it's such a tiny leak that it's not worth shutting down sections of the pipeline? Well, utilities companies in the UK and utilities authorities are starting to use satellite imagery, not just with images, obviously, but more spectral analysis of what's going on in the atmosphere to detect methane leaks, tiny methane leaks in pipelines. This is a massive win for the environment because being able to spot those little 0.2% methane leaks that don't leak over 10 years before the pipeline is physically inspected is a massive reduction in CO2 emissions. So everybody from the people making pipelines to the people designing office buildings, looking at what their environmental footprint can be using satellite imagery, to shipping companies that are trying to track their ships and making their ships have more efficient routes to save on fuel. I think almost every type of manufacturing and infrastructure company needs to be looking at space right now and thinking about what type of collaboration they can have to help them reduce their environmental footprint or understand better what they're doing.
Fantastic. And with this, we're just a couple of minutes late, so I'm quite proud of myself. Allow me to thank you, Connor, for this very intense 33 minutes with. I'm sure that we will have the time to discuss this further on in our months of monthly column. Don't forget to sign up to our newsletter. Don't forget to read all the VC columns, the VentureSpace column by Connor that is published every month. And allow me to thank also Torsten for the supporting actor behind the scene, and of course the production of SpaceWatch.Global. As usual, that helps me to conduct the journey. So thank you to Frank, thank you to Claudia, thank you to Torsten. And with this, with only 3 minutes delay, Torsten, over to you. Thank you.
Yeah, thank you very much. And my job is now to tell you a bit about our next events. And our next event is on next Monday, so it's coming soon. And we will host our 17th Space Café Law Breakfast with Stephen Freeland. And Stephen and I are delighted to welcome Juliana Zeus from RUSI, the Royal United Service Institute, one of the eldest, or the eldest think tank, or military think tank in the world in UK, and Professor Marco Ferrazani from ESA, from the European Space Agency, and join us for this very, very special event. And that's on our list for the upcoming time. So you see, we are dropping into a summer hole, and I think we will keep you updated. What are we reporting during the summer? So we will keep it a bit slower as well. So find and subscribe our newsletters, please, on social media. You can go to SpaceWatch.Global, to our website, or on our media channels, or here in the chat. As always, we would like to hear your feedback. So please check in with us on X, LinkedIn, or Facebook. That's particular for my generation. I know I'm one of the last remaining people that are having a Facebook account, but however, it is how it is. Don't forget to sign up to our other newsletters, as Emma mentioned earlier. And if you want to support us, even more events like that, go treat yourself with something special and become a space watcher today. And I could stand up here if that would allow me. So I'm wearing with pride my Space Watcher t-shirt, or help us in the business club. Thank you all very much for your interest today. Thank you, Emma and Colo, for this very inspiring and very intense talk. And thank you all to our audience for joining us and the tech team for this very smooth operation. We hope to see you at the next event on Monday in our case, and visit our website to follow us on social media or follow us on social media. And don't forget to become a space watcher. Thank you very much. Bye.